Welcome back to the currency markets then, and the Indian rupee traded weak today on dollar demand by the oil refiners. Also a dismal performance by the equity markets weighed onto the rupee sentiment. Strong crude oil prices also added to the pressure and ditto the international markets where euro is trading off its 3-month highs as investors cut the bullish bets after ECB cash injection passed without any surprise. Other currencies like the Australian dollar and the New Zealand dollar also are off their multi-month highs during the day today. Let's go across then to Abhishek Goenka. He is CEO, India Forex Advisors, and he joins us right here in our studios. Abhishek, hi, welcome to the show. Let's start with the Indian rupee first and the kind of decline, though not totally unexpected with the kind of cues that you're getting from the international markets. But how do you see that trading now?
I think the way to see Indian rupee is, first the international factors that has to be taken into account. Just after the ECB got, the European banks got the money, the euros got sold off. Now that's something like bad news, that's something which is strengthening the case for dollar. Moreover, if you see the data which has come out from the US in terms of GDP, the employment figures, the beige book report or the various ISM figures has been extremely nice for the US. Now that takes care of the US dollar strength. I feel that internationally, if I take dollar index into account, I think the index is moving above 80, 81 or 82, probably in the medium term. And the first sign of the index is what we have gone from the Japanese yen, which is now heading towards a fresh trend reversal and heading towards 81, 82 levels. So I think internationally, US dollar is definitely strong. As for the local factors are concerned, I think it was only the flows which was letting the rupee appreciate. But I think the flows have kind of gone a little slow down and will be a little slow down because of the GDP figures that has come in India. The inflation has again become a serious issue with oil prices getting up. And the current account deficit and the fiscal deficit is actually creating a lot of problems for the government. So I think that in the medium term, short to medium term, I think 50 is possible in rupee. Though every time the market is hitting 49.30, the dollar is getting sold. But I think this time if it breaks 49.40, I think 50 is very much on the charts.
Abhishek, there have been various reports on where the rupee is expected to appreciate as well. We are hearing levels like 47, 48. I mean, do you think there's that much of a bend as well?
I personally don't feel that rupee should break 48.
Okay.
A knee jerk to a 48 or a 48.5 is possible in case of a huge flow coming into the market. But I personally feel that US dollar in 2012 first half is likely to remain stronger. And I think rupee should take cues from there. And once levels of 49.40 hurdle breaks and RBI is slightly out of the market, I think the rupee will take its course to 50.
How did you read into Bernanke's statement yesterday with no QE3 coming in? Do you think that's a slightly discouraging for the high-yielding currencies in Asia, including Indian rupee?
See, what Bernanke said this time, last time when it was told that they are going to come in with a QE3 and the figures in the US were still coming up good, it was kind of astonishing for us. Now, since again the statement has come out that probably the interest rates will remain low and since the GDP figures have come up and the expectations of the QE3 is not going to be so soon, I think that's looked a little normal now. So I think because of which we feel that US dollar is likely to get stronger, and I think rupee would actually take cues from it to an extent, and the overall oversold rupee, which was above 50, has now kind of got normalized. Now I think the macroeconomic local fundamentals will start playing again, and I think 50, 49.5 at levels are very much possible in the market.
How do you look at the euro? Because the kind of cues that you're getting from that currency have been quite mixed, while the LTRO is now out of way. The concerns from that area still are on the higher side.
I guess whatever move above 1.33 in euro is kind of exaggerated move. Looking at the fundamentals, I think whatever flows and liquidity has been provided in the market, it was quite priced in. And if you take a poll across all the economists in the world, they will say there's more of a short-term benefit that the currency is going to get out of it. But ultimately, the medium-term contagion effect of the euro still remains. So I think in the short term, a couple of 100 points move 35, 36 can't be ruled out. But overall, if I have to take a trading position or in case I have to take a medium-term call on the euro, I would probably go short at every up move.
There has been lots of euphoria in case of Australian dollar, New Zealand dollar in the previous week, a few sessions in that sense. Today, of course, was a day of profit taking, but would you bet on any of these currencies in the longer term?
I would personally not bet on the Australian and New Zealand dollar on the long side. I think the levels in which Australian and New Zealand dollars have entered into, I mean, look at gold, what happened yesterday. I mean, my clients used to ask me, I mean, it's going to $2,000. The point is, any levels close to $1,800 in gold is extremely overvalued. And the kind of fall we saw yesterday, close to around $100 in gold, I think for Australia and New Zealand dollars, since these are very, very high risky currencies, they go up phenomenally high and they fall down in a couple of days' time. So I think any level over 1.07 in Australian dollar is extremely overvalued. Even the New Zealand dollar doesn't look too great. So on a short-term horizon, go along with stops. But overall, if you're medium-term positions, I don't think these currencies are going to be bought right now.
While most of these currencies have been under euphoria, as you rightly pointed out, and very volatile as well, how do you see the high crude prices actually doing some damage to them?
Definitely, on the medium term, I don't think the oil prices are likely to stay higher. We are definitely see a lot of Iranian problems right now, Syrian problems, because of which oil is actually hitting high. But overall, I think that with the overall global slowdown and the overall sentiment, I think even if it hits $3-4 higher from the current levels, I think it should come below $100. So I think once the oil starts going down, gold starts hitting the 100-day, 200-day moving average of 1680 below, I think these currencies are ripe for a correction, and there will be huge correction in this currency, at least to the extent of 8 to 10%.
One final, one-level word, and that is, Abhishek, where do you see the rupee closing this quarter now? With elections and budget coming in, there's lots of nervousness in the markets, but how do you see a March ending happening? I think levels close to 49.5 something would be justified close to March end. All right, Abhishek, we'll let you go at that. Thank you so much for joining us. That's the view on currencies coming in from India Forex Advisors. But before we go, for all of you who want tips on where to invest in the commodity or the currency space, can write to us at hotcommodities@etnow.tv and we will get answers to all your queries. With that, it's a wrap on Hot Commodities. Thank you for watching.